Hello everyone, welcome to the Elliott Wave Forex.com YouTube channel. My name is Henry. Today is Wednesday, May 27. The time is around 4 a.m. GMT. So today we will be providing an update for the S&P 500. This is SPX. This is the spot, okay, the cash SPX, not the futures. So it will be slightly different than ES, for example, or the ETF SPY, but they still, regardless, they share some resemblance in terms of the structure. Okay, so let's check out here. This is a 30 minutes chart. All right, so we got this with 4 over here, so we know that we are in some sort of an impulsive rally. Okay, if that's the case, and it will be a 5-way rally in which this pullback here ended with 4 as an APC. All right, and then that means we have started to rally again within the wave 5. And as you know, wave 5, the subdivision should be a 5 waves. So we can see right here we have 1, 2, 3, 4, 5 nesting here. And this 5 waves up in the black degree ended 1 in the red degree, and then this wave 2 pull back here, finish here as a zigzag APC. Okay, and then from there we have continued to rally again. Now we have already broken above the previous peak, the wave 1, so that suggests that currently, as long as we stay above this May 22nd, which is 29.32, we can continue to see more upside, okay, in S&P. Alright, so let's check out a little bit the context of this move, and then also look at some possible alternates so that we cover everything here. Now if I zoom out, this is the 4-hour chart, again without labels. If you do want to see regular updates or labels in other time frames, feel free to check our service. We have 14 days free trial. Again, the link is provided in the description of the video. Alright, so let's check out this one. You see the wave 4 here, and that wave 4 should be in the same wave 4 over here. Okay, that you can see right here. So we are now in the wave 5. So that means this wave 4 here is part of the same rally from the COVID-19 low, the March 23rd low, right? So this needs to be your wave 3 because remember this one is B and C, so it's in some sort of zigzag. So you can see right here, if this is your C and this is your B, then obviously this is your A. And if this is your EPC, then this got to be your 3, right? This needs to be your 3 here. So if and now this is what I making sense of the 1-hour chart here, right? And looking at the proper context. So we got 3 and 4, so this somewhere here can be a 1 and 2, for example. Okay, so now we have a 5-way move, all right, from the March low, and we are now could possibly within wave 5. Now we can either be in the wave 5 or okay, alternates. This could be your 3 and 4, this could be your 5, and this could be already ending 1 in the higher degree. Let's select this. Now in this kind of scenario here, this is actually even more bullish because then you already ended the 2 with 2 correction, and then you are in the new with 3. So this is actually more bullish. Now this is more sort of this is less bullish, but still is expecting for the upside, right? If it is a 5-way up from the lows. All right, so now this is the sort of the primary count on the primary view, calling for a 5-way move from March 23rd, and we got from here what looks to be a 1 and 2, and then a new high again after that, right? So this is your 1, this is your 2, and we rally higher again. Now, so what is the sort of the minimum target here? Well, the minimum target is going to be, if it is really going to extend higher in the wave 3, then it can potentially go to at least 100% of this one, right? So we can go to at least this area, 31.48 is going to be in the 100% extension area. Or possibly if it is really with 3, it can extend to as high as 32.82, which is the 161.8% extension. Okay, so that is the idea in terms of target on the upside. Now other possible alternates. Now this is when we will need to rank which one is higher probability than the others, right? And then this is what we think is the higher probability with the trend. But now let's say if SNB fails to hold above 29.32 and starts to drop, okay, then one way to sort of label it, okay, one way to label it is to label, for example, we could be still within the wave 1 right now. So in other words, this could be a 1, and then you just shift the label a bit, something like this. This is your 4, this is your 3, right? Then you can shift the label a bit like this and then call it completed. Now which one is better, calling like this or the previous one? That's when you need to make decision. Now in the, if you look at this, the distribution or the scale of this pullback here, this swing compared to this swing and that seems to indicate this is less likely to be a wave 4. This is less likely to be a wave 4 because the scale on the distribution on the timing seems to be telling us it's best to count it not as a wave 4 like this, but as a new connector or new cycle. You can also look at the RSI here. It looks to be two different, you have a rally, a very nice rally, and then you have a complete different cycle, which is like a correction of this rally. So this then will be better to count it as a, instead of wave 3, wave 4, wave 5, it will be better to count it like this, in which you have a 5 waves up, ended here, and this is your wave 2, and then you have made a new high, which means we have resumed the leg higher. Okay, so that's why this view here currently is being favored than saying that, okay, well, we are still only ending a 5 ways up from here. Okay, now someone who have a bearish bias might always try to find bearish kind of count in any case, right? And of course, I mean, if this is a 4 and a 5, for example, and if this is a 4 and a 5, then you could actually even suggest, well, okay, I could have even ended with 5 here if that's the case, right? Now if you believe this is 1, 2, 3, 4, 5, then you could say I could have ended 5 here as well, because you have enough number of swing of 5 waves to finish, and then suddenly you can finish this entire move here and then starts to do a bigger pullback. Okay, but those are alternates, and based on the overall sort of market. Okay, based on we don't analyze S&P just by looking at S&P. We look at 72 instrument to figure out which one is the better count. Okay, now we believe that looking at all the other markets right now, we believe that the better count is this one, calling this as a connector, calling this 1, 2, and therefore now as long as we stay above here, we could see for the upside again. Now if this fails, then the next step is going to be counting this as a 1 of 5, and then still going to be supported against this May 14 low. If this this most aggressive bullish pivot fails, then it's going to be ending this as a wave 1 and then correcting these 5 waves in 3, 7, 11 swing, and then still expecting another leg higher. Okay, so I hope this is helpful. All right, so if you do want to check our service, again, there is a free trial provided in the link below. So I'll see you all again next time, and have a nice day to you all.